Welcome back everyone to the Audacious Money Witch channel, where we talk about investing and trading and a lot of fun things. You have probably heard about the global market turmoil happening right now.
Our top story this morning, the market sell-off. You've got the Dow on track to open the day off just over 1,200 points. We've seen this market sell-off. Also, the S&P 500 futures, that's on track to open the day off just about to 4%. When you take a look at NASDAQ 100, actually set to open off just over 5.5%. You've got Apple on track to open the day here off just about 9.5%. That selling also carrying over to the NVIDIA. You've got NVIDIA off just about 12.5%. There was a report out from the information just about delays in that Blackwell chip.
But what does the data tell us happens next? And more importantly, you must watch this one till the end, as this is my most important video of the year. Because we are now confirmed to be in the early stages of a major market crash. I'm going to show you the catalyst which kicked this move off, what's going to send stocks even lower, just how far I think stocks can fall, and how you can make a fortune on this move. What just happened on the stock markets around the world?
The Dow's down more than 1,000 points as that global sell-off intensifies.
And the S&P 500 are down even more than that. And the S&P 500 generally is what's inside of people's retirement savings accounts. I just want to point out, however, that just a few weeks ago, all the markets were at record highs, and
very few places to hide. You really see the brunt of that bid in the bond market, but gold is down, Bitcoin is down, stocks across every major indexes are down.
Why the S&P 500 dropped 3% and erased 1.4 trillion in market value. The worst day since September 2022. VIX was up as much as 190% intraday, third largest spike in history after the 28 financial crisis and 2020 crisis, but finished the day up 58%. NASDAQ 100 was down as much as 6% intraday, but managed to bounce and ended the day down 3%, erasing 900 billion in market cap. Magnificent 7 stocks are down a whopping $3 trillion in market value from their record highs. NVIDIA is down 28% from its peak and lost over $1.1 trillion in market cap. This is something that most investors did not see coming, because I've noted that this is the biggest bubble in the top 10 stocks in history, which means more investors around the world are crammed into these, and now they're selling off in a major way. But this move isn't over, despite the fact that people came in and bought today's dip. I'm going to show you exactly what you need to know as far as why stocks are about to sell off even more. First, let's talk about what kicked off this move, because coincidentally enough, we have to head over to Japan, just like Warren Buffett did in my last video. If you watched it, you will know he has seen this coming, because he sold over half of his Apple shares.
Stocks are selling off globally, with Japanese stocks having their worst day since 1987.
It was the last place in the world to sort of get free money. And that free money we couldn't necessarily quantify, but we're seeing sort of the result of the unwind now to say, wow, that was massive.
As intensifying yen rally sinks, Japan stocks rattles global markets and looks to trigger what could be one of the biggest unwinds that we've seen in over a decade. The sharp appreciation of the currency, which has gathered pace since the Bank of Japan increased its interest rates on July 31st, rumbled through global markets as it upended countless investment strategies that were built on cheap borrowing in the yen. Hedge funds and large strategies take advantage of this for a very long time. They are like, I'm a portfolio manager. Hey boss, let's just keep doing it and doing it. It's never going to end. So we keep leveraging, pushing the envelope, pushing, let's get more returns, because we got to keep up with the guys down the hall, because they came up with a new way to take advantage of this magic money machine that creates nothing but profits, and they just keep at it. They take leverage because they think it's never going to come unwound, or if it does, they think they have time to unwind it. This time, the Bank of Japan says, look, we care about our currency, and yes, well, they do, and now they're sacrificing literally the global markets. Is all these strategies come unwound? And what that's doing is it's causing margin calls, forcing them to sell their assets, such as stocks. Yet the impact of the shift in the yen has hit global carry trade far more than many market participants have anticipated, because they didn't realize how many people were running this carry trade. They took outsized leverage bets on it. Now they're losing and forcibly unwinding. And now they're about to trigger the machines and the CTAs to sell. The risk parities to sell. And with volatility up, well, those vol strategies, they're going to sell too. And these strategies are computer programs. Nobody overrides them. They just sell when they're told to sell. Why are they going to be told to sell? Well, remembering that the Fed and the Bank of Japan are in a tough position. Because the Fed wants to cut rates, its unemployment rates were higher than expected, got big tech like Amazon commenting on how the US consumer stretched thin. But if they lower and the Bank of Japan just keeps their rates, kind of in that upwards trajectory, this could actually add even more selling pressure, because the money that was borrowed in yen and bought in dollars now needs to be sold even more in dollars and paid back in yen. And not being able to, if the Fed cuts rates, USD is going lower against other currencies like yen. So it will need more USD to pay back the Bank of Japan. So they need to sell more stocks to get those dollars. CTAs, they trade hundreds of billions of dollars. When their trigger point says sell, well, then they start selling. This is how you see Nvidia at 90, down 15% on Monday morning. The Japanese government's gross size of its balance sheet is $20 trillion, over 505% of the Japanese GDP, or 72% of the US GDP. A gigantic $20 trillion carry trade. Do you think one day is over and done with? The Nikkei 225 index just saw the large two-day drop in the entire history of 19% and fell into a bear market. Circuit breakers were seen in Japan, South Korea, and Taiwan. USD to Japan is down 13% over the last 5 weeks. However, even bear markets experience abrupt and massive rallies. In other words, we will see more volatility on both sides going forward. Buckle up. The stock markets around the world are crashing right now. But why? The answer to this question is the yen carry trade, a term you'll probably hear many times this week. So what exactly is yen carry trade, and why did it cause a market downturn? It all started after the Bank of Japan, BOJ, decided to raise rates at their most recent meeting. The BOJ raised rates to around 0.25% in their second rate hike since 2007, effectively ending negative rate policy. The yen carry trade explained. For years, investors would borrow yen at ultra-low rates, such as 0.4%, and use these yen as a form of leverage. Investors could convert these yen into US dollars or other currencies and get almost free margin. Low rates made this possible. The wide spread between rapidly rising rates in the US and other countries and negative rates in Japan made it possible. However, as the BOJ began raising rates, this resulted in an unwinding of the carry trade, especially as rate cuts are beginning in the US and Europe. As a result, the Japanese yen strengthened and the US Japanese currency pair just hit its lowest level since December 2023. You now receive 142 yen for every US dollar, compared to 160 yen for every US dollar a few weeks ago. But here's why. This is the key point. As the yen strengthens, many of these yen carry trades are being margin called. Suddenly, the era of free yen loans is coming to an end. As these margin loans are called, the underlying assets are being sold and crashing equity markets. If everyone just borrowed that money and held it in super safe things or even cash, and then they could just pay it back, that'd be no big deal, but that's obviously not what's happened. The carry trade is unwinding $20 trillion. It could take this whole month to unwind, in my opinion. How are you going to make a fortune on this? Well, you need to know this is a gift as a long-term investor. All this volatility is how we make money in this market. How do we get a stock like Nvidia to crumble? Like I said, it's an overcrowded trade. Too many people already own it. Then who else is left to buy it? If too many people are in the swimming pool, then who else wants in? There is not enough room. You need to find opportunities that few people see. Buy a stock that Wall Street has thrown out and give up in the short term. And when this storm is over, you have bought enough of your shares of a wide moat company at the margin of safety price. Then you wait for it, let time play out, go watch the sunrise after the storm, go swim in the ocean, and wait for your Lulu stock to take you to places you have never been. Yes, I am confident that I will make a lot of money investing in Lululemon stock during this crash. How low are we crashing to? I have reasons to believe we will have a 40% crash. I have explained why in this video if you're interested.